Hey everyone, thanks for watching this trade about stickers. Today we're going to talk about preventing liquidations using credit cards. So I'll kind of show you my current situation here. I have AAVE. I was down to about maybe 1,000, and I needed some credit line because it was just the price was just going down on my on the price, and so I was able to kind of DCA with my DCA trade bot. But this is a separate account where I'm borrowing from here to trade on Apex Pro, okay? And I needed liquidity, so what I needed to do was to use credit cards to kind of cover what I have. And basically every income that I get already buys WBTC every single week, or every day as income comes in, I buy WBTC. And so I'm buying it on his way down, but yet as it goes down, I have less and less credit, and I'm waiting for it to pump back up in order for me to recover. And so what I needed to do was, borrow from my credit cards to find liquidity. So you have a credit line of 10,000, 20,000. That's what you can use. Okay. Now, of course, if you had no leverage on it, that's probably the best way to do. But low leverage is a little bit better, because it's just the multiples of even like 2 to 3 to 5. It just grows so much so fast with just a little bit of leverage. Okay. And that way we can handle bigger moves on Bitcoin, and usually choosing crypto that's has lower volatility when Bitcoin is probably the lowest of the volatility. Now I think all the other altcoins have more volatility in that double-digit volatility, so it can move 10% or more, and Bitcoin usually about 5%. Of course, some days it can move as high as 20% or so, but it's all handleable. We can kind of adjust. There's time for us to add more liquidity, add our weekly payments into it, and still ride out what we can. And so you see all these buy orders as it kind of DCAs down on my Apex Pro account, and liquidation's at 33,000, so I still have lots of room, and it looks like it's starting to pump back up, which is what I'm looking for to kind of start taking profit up here. Okay, but as we were coming down, my liquidity on AAVE was getting pretty tight. Of course, I borrowed to pay my bills, and every time I borrow to pay my bills, I go ahead and I'll actually double up and buy more BTC to pay off my credit cards. Situation is because as you have income, you buy Bitcoin, wrap Bitcoin, and as you have expenses on your credit card, well, if you spend it directly on the liability, then all you have is the liability, nothing to show for. But if you borrowed more Bitcoin and backed that Bitcoin to pay off your liability, now you have an asset to cover your liability, if that makes sense. Okay, so that's kind of what I do whenever I need to make a $1,000 payment on my credit card. Then I'll borrow $1,500, put it back in here, pull 1,000 out, and then pay off my credit card. That way, this grows every time I spend my credit card, and I know there's something there to cover it. And which is why if I kind of go too tight on this, I then need to pull more credit to cover this in order to back it up until it pumps back up. And it looks like it's hopefully keeps going and starts to recover. So I've been buying even with credit. So I only pull, I have a PayPal credit card with a 6,000 credit limit, and I borrowed about 3,000 out of that to cover $1,000 every time it dropped a few thousand bucks. So I probably added 1,000 here, it came back up, added another 1,000 over here, and then now it's starting to recover. So that's good. So what you need to do this is you need to represent this. Oh, there it is. So basically what I got was two PayPal accounts. Okay, you know it's like you're sending money to a friend, but you're actually just sending it to yourself with a credit card linked to it. So it kind of causes, I don't know if it's is a cash advance or not, or is it considered as a purchase, but it doesn't matter. You want to just I think they charge you 1.5% to send it. Whatever the fee is, takes a little bit out of that. When you pull $1,000, you get the full 1,000. You probably get like maybe $950 or something like that. And then use it for 30 days or less, and then pay back the credit card and make the minimum payments until the price recovers. So that's what I did. I pulled about 3,000 out of my 6,000. And I didn't use the full 3,000 to go in. I put about $1,000 probably every week as it came down to continually cover my position for AAVE. So as my my health factor went down to 10 or 1.10 or below, it starts to get red, and now I put another 1,000 just to cover, 1,000 cover. Whenever it kind of dropped back up, the 1,000 will bring back to the yellow or orange, and as it comes back down again, constantly put 1,000 in, and so you kind of descend in 1,000 every time it goes back into the red, okay, until it recovers. So I have another 3,000 to go. If it keeps going down to $50,000 on crypto, on BTC, then I'll have a little more to cover as it goes down. Okay. All right. And so when you send it to yourself, you can then instantly pay yourself and send that back into your account, but they charge like a 1.5% fee, which is better if you kind of look at it. Would you rather pay 5% to get liquidated on AAVE, which means they'll sell half of it at the lower price, and they charge you 5%, or would you rather pay 1.5% to your credit card and do it yourself? Okay, and you want to hold your position, or if you knew it was coming, and most of the times we don't know it's coming because we're horrible traders or whatever, and we don't expect it. You see, it's kind of, it just made $300 now. You can then sell it ahead of time, switch your position to USDC, and that way you can cover this as it comes down. In a sense, taking profit through switching your crypto to USDC. Okay, so that, right? But you have to know and kind of know how to read the charts. Okay, so if you don't know, then that's what you would do. I will see it, but then I don't take action fast enough, and of course you get caught. Then you're gonna have to ride it out too. Okay, a lot of times looking at this, reading these charts here, you can kind of tell. Usually these 2 points here, what is it called? Bearish divergence. If this was going up, and usually 2 points here is when it starts to climb. 2 points there, it starts to come down. So I'm kind of noticing these double points where it starts to pump up or pump down, but of course we don't know the distance. Okay, so if you do get caught, then you either write it out or try to take sell what you can, and then get back in when it starts to recover. Okay. All right, so let's continue our presentation here. So that's how I've been doing it. So usually take 50% of it, replenish the account, and then we'll borrow you. So the other thing we also do is every time I make a credit card payment, I'll borrow the USDC and then buy more WBTC in AAVE to pay off my payments. Okay, the reason for that is every time you use your credit card, you're basically buying liabilities, right? But with no asset to back it up. So I have two sets. Okay, one set will be the income that comes in from whatever your job or sales, and that goes into WBTC. Now, if you spend on the credit card, instead of spending it directly and are getting the 5%, or because let's say Amazon card gives you 5% every time you use it, you get that. But then also in AAVE, when you pay it off, borrow from your AAVE, and then so you need to make a credit card payment of $1,000 to your PayPal to your Amazon account. Borrow out of here, borrow it, and switch it back to WPC, back it up, and then borrow it again to pay off your bills. Okay, that way you have an asset that backs up and pays off your credit card. Okay, so this will grow twice as fast, and yet you incur more debt. I agree. At 6.4%, which is then what you need to do to cover and use the bank's money to keep this position alive until it pumps and doubles. As soon as it doubles once or twice, you'll be in the clear. As long as you don't borrow too much, you should be alright, and that's how you're going to beat inflation. Okay, so alright, so let's go ahead and see what else we got here. Alright, so we just talked about that. And normally what I do is I'll have an income generating bot, and this uses the TradeBot Secrets app. I'll show you how that looks. To set up my trade so that DCA is in, and it's always in a long position on a, usually on a bull run market at low leverage, so that you can use those settings. And every day it'll set up these rungs based on what its position, and so you can DCA in and always take profit after the profit line. So it always sets it up after the profit line, and it only sells about 80% of this position. So 7 times 4 will be 28, 47 up here. After refresh, I think I took on some positions, so it's gonna readjust these numbers. So whenever it pumps up, you know that right here I was about 42 bucks in the hole from that point on. So I'll probably recover $42 over here, and then if it keeps going on, then we'll take more profit, maybe up to $100, $150 in a day. Of course, it took several days to get down here. I only had one little sell right here when it pumped up a little bit, but of course the DCA line's been the profit line's been moving down as I DCA'd in, and hopefully I'm waiting for this to take off. Okay, and current position is liquidation 33,000. See how $500 in, and every so often I'll probably, if I start to take profit here, then I'll probably move this to a no leverage account, and I'll let that grow and not have to monitor and check it all the time and have to cover this if I need to. Okay, but usually 5x leverage is pretty safe. 2x is even better. Lower the leverage is better, and just let this run on its own. Okay, definitely in a bear market, I would not want to leverage 5, because you'll probably be taken out as it corrects 50% or more on Bitcoin, and that usually could happen unless you don't keep adding to this account. Okay. All right. So here's the thing. This is the settings here for what I'll use. Offset from price about 1%, and it usually fluctuate between 5%, certain days. So that way with 5 rungs, it'll cover 5% of movement as it comes down, and then it'll also take profit 5% up and down. So in total, the full swing will be 5% up, 5% down, and it'll create this every 24 hours. And I think the longer the better. I usually have 6 hours, and I thought that was too much. Just kind of accumulate positions too early, too fast. Once a day seems to be reasonable. Maybe even once every 2 days. I might even do 48 hours with that to kind of slow it down a little bit. And then so basically it just hits this auto run process and auto updates the price every single day to DCA your orders in. Okay, you want access to this, it's in the description below. If you want to set up more rungs, 10, 100, you can just do that manually. Click on buy, and it'll create the buy rungs and sell rungs. DCA separate by a certain percentage that you want, and use a percentage of your wallet. All auto calculated so that you have to do it by hand, and it's all done on the Apex Pro account. It doesn't use we can't use it on Omni, but I haven't done it for Omni yet. I don't see a reason to do it for Omni right now, because I use USDC, and yeah. Okay. All right. I think that's pretty much all I have for now. Hopefully this starts to come up, it starts to take profit, and go from there. All right. Then you probably use this, whatever it generates, to pay back the loan, and then pay back AAVE. So as this makes profit, I can then pay back AAVE, and then pay back these loan, or even add more positions to WBTC. Okay. All right. Hopefully that's helped you to cover your positions, especially when you're leveraging a lot and borrowing a lot and using a lot, to then start to use credit cards to cover it. And then as long as you know that you have assets backing your stuff, then it makes sense to purchase Bitcoin with credit cards rather than buying liabilities with it. Okay. And on top of that, you get to DCA at a lower price, so when it does pump up, you'll have more than enough to cover that and pay it off. Okay. All right. Thanks for watching. We'll talk to you then.